Namaste, good morning. A session where we complete the major part of non residents. Tomorrow should be our DTAA, no, remaining part of non resident and DTAA. Day after tomorrow, miscellaneous areas, and Saturday should be this BEPS and treaties, which should make us end the whole syllabus. Section 9A, presence of eligible fund manager in India not to constitute business connection. Eligible fund manager. So far we are seeing what is meant by income accruing or arising in India. Salaries, services rendered in India, house property located in India, business or profession, business connection in India, habitually concludes contract, habitually stores goods and sells them, delivers them, habitually involves himself on behalf of the non-resident in various works, okay, significant economic presence are all cases where we saw business connection. In capital gains, if the asset is located or registered in India, or if a company is there in outside India and the substantial value of the company is for investment made in India, substantial value means value exceeding 10 crores plus 50 percentage of its as a total value, then it is there. Interest, royalty, everything from resident, from government, from a non-resident who has been investing in India in all cases, and gift. So these are all the things we are seeing so far. Now I am moving into eligible fund manager. Eligible fund manager is one who is investing on behalf of you. On behalf of you. Okay. So fund manager is a person who makes investment strategy, guide you in investing. It may be one person or a group of people. Under normal circumstances, presence of fund manager in India constitutes business connection. Other things being constant, if you have a fund manager in India, that is a business connection. Okay, and the profit of such manager or fund or offshore investment will be taxable. There may be circumstances that the offshore investing entity might become a resident as well. Okay. In order to provide relief, this section is incorporated. Just because a fund manager is there, don't tax that fund. Fund is not here. Only the person who is managing the fund is here. Okay. This provision is available for fund manager of offshore funds. Fund is there outside India, but the manager is located in India. Okay. The person who is managing. Okay. Uh, uh, இப்போ majority of the mutual funds, DRL, DHL, okay, they for Asian region they have India as the office, okay. So for India இருக்கிறதுக்கு they are taxable, அது direct. Just because the fund manager is here and the investment is happening outside India, you don't tax it. Okay. In other words, fund should not be a person in India. It is not for only the manager should be in India. It should be a offshore fund only. It should be a offshore fund only. Okay. For investment made in India, tax liability will arise in the normal course. So There is no doubt about it. For investment in India, there is no doubt tax liability arises. The said fund should be a non-resident with which India has a DTAA. Aggregate participation of investment in the fund directly or indirectly by person residing in India should not exceed 5% of the corpus. Okay, that is on an average it should not exceed 5% of the corpus. For calculating the aggregate participation, first 25 crores will not be taken into account. Okay, over and above 25 crores only it will be considered up to first 25 crores, and the average monthly balance will be taken, not on an annual basis, the average monthly balance. Remuneration paid by the fund to an eligible fund manager in respect of fund management activity shall not be less than the ALP, because that is taxable. The fund manager is located in India. Income from fund outside India will not be taxable. This is the prime provision. Income from fund outside India will not be taxable just because the fund manager is located in India. It is not the location of the fund manager, it is the overall aspect. Am I clear to you? Okay. So fund management through such fund manager will not be taken as business connection. One minute before doing fund manager is not a question. I have not seen questions in that. Okay, before doing the questions, practical questions, let us also quickly run through the exemptions. Let us quickly run through the exemptions available for non-residents. Interest income on money standing to the credit of NRE account, not taxable. NRE account வர interest is not taxable for the non-resident. No. If you are a non-resident, the NRE account you maintain, the interest accruing on that account is not taxable. Yeah, to invest money. That's what is the okay. It is further mentioned that the joint holders of an NID will not be treated as AOP and their incomes will be exempt. Okay. Interest income from RDB issued by Indian company or business trust. Rupee denominated bonds. Okay. Everything should be foreign source. Yesterday we saw remuneration received by officials of embassies of outside India. Okay, next. Remuneration received by foreign nationals for services rendered in India from a foreign enterprise. This I told you to remember in one of the classes that we will see this. What is this? Ipo, there is a German company from which I am importing some machinery. That German company is sending their engineers for installation in India. During the period they are in India, salary is paid to them by the German company. Is the salary for the services rendered in India? Yes, the services are. So in the provision is to give relief. During his stay in India, the remuneration of a foreign national from a foreign country is exempt, provided foreign enterprise is not engaged in business in India. Employees stay in India do not aggregate increase 90 days. In aggregate, it should not be more than 90 days, and the remuneration is not liable to be deducted under income tax law. Okay, here you cannot claim it as a deduction. The Indian company cannot claim it as a deduction. In all these circumstances, I am going to. So, temporarily a person posted on site in India will not be coming under the taxation. Similarly, remuneration in connection with employment in a foreign ship. So ships comes to various ports. Okay, so that at that time the ship crew members are deemed to be in India. Okay, so 90 days, up to 90 days, I am going to give them the relief. The next one is specific training programs which are offered by foreign nationals to government employees. Okay, to the government employees, their remuneration is exempt. Royalty technical feesலாம் விட்டுருங்க அதெல்லாம் இப்போ taxable in the exemption law is introduced the early 90s like that. So, okay, interest other than for individuals. Interest on deposit made by a foreign bank with a scheduled bank with the RBI, because that is for maintaining SRR, CRR ratios, etc. Interest payable by scheduled bank on deposit in foreign currency where acceptance of such deposit is duly authorized by RBI. The next is crude oil specific provision. The next two are crude oil, and then okay, our Prime Minister is very friendly with the Abu Dhabi Prince. Okay, so அவங்களுக்கு வந்து கொடுக்கிற exemptions இது. Okay, again, not a questionable area in the exemption ல NRE account and இது மாத்திரம் ஞாபகம் வச்சுட்டா போதும், not a questionable area. Income received in India in Indian currency on account of sale of crude oil or any other goods for rendering services as may be notified. Income accruing or arising on account of storage of crude oil facility in India and sale of crude oil therefrom to any person resident in India. Okay, more for Abu Dhabi and the Middle East countries. Okay, from the income from the sale of leftover stock after the licensing period is over, also leftover stock from facility in India after the expiry of the agreement or on termination of the agreement. Okay, income from Strategic Petroleum Reserve Limited being a wholly owned subsidiary of ONGC, I mean not ONGC, Ministry of Oil and Petroleum, oil and natural gas as a result of rearrangement, replenishment. Okay, do not worry, not a very favorite area. IFSC I will come separately. IFSC I will come separately. And the last is with regard to exemption is income from wholly owned subsidiary of Abu Dhabi Investment Authority, Sovereign Wealth Fund and Pension Fund. Okay, when our Prime Minister visited Abu Dhabi, he promised that if they start some investment activity from their government fund. Okay, now we have our PF, we have our pension fund. Okay, in our country we have provident fund, pension fund. இதெல்லாம் invest பண்ணா, if I invest these things, okay, for the fund will invest these things and enjoy returns. Foreignly இந்த மாதிரி funds இருக்கு, pension fund, PF. Why can't I make them invest that in Indian bonds, Indian debentures? That's the whole purpose of this scheme. Income in the nature of dividend, interest, LTCG, that is income from investment, arising from an investment made in India, whether in debt or share capital or units, would be exempted provided the investment is made between 2020 and 2024 and investment is held for a minimum period of 3 years. இல்லை இப்போ next 5 years, next 4 years அதை எக்ஸ்டெண்ட் பண்ணிட்டே போவாங்க அதுக்கப்புறம். To make them come fast and invest. What are all the eligible investment? In business trust, in company or enterprises or an entity carrying on infrastructural development. So the whole point is they were investing in India's infrastructure. A domestic company set up and registered on or after 1/4/2021, having minimum 75% of its investment in one or more companies or enterprises engaged in the business of developing or operating infrastructure facility. NBFC again engaged in the business of infrastructure facility. Everything is for infrastructure. Category 1 and Category 2 Alternative Investment Fund regulated by SEBI having not less than 50% of investment in infrastructure facility. So in all these cases, if you invest in the infrastructure facility from your sovereign fund, it's one government to another government, I am going to give exemption. Where conditions mentioned therein are not satisfied, the exemption will be withdrawn. Withdraw 3 years invest பண்ணலாம். What is wholly subsidiary of the Abu Dhabi Investment Authority? It is a resident of UAE, makes investment directly or indirectly out of the funds owned by government of Abu Dhabi. It's a government company. What is sovereign wealth fund? This is for all countries, not just Abu Dhabi. Owned and controlled by government of a foreign country. Sovereign wealth fund or provident fund of that country. Okay. Set up and regulated under the law of such country. Earnings of the fund should only accrue to government and not to private persons. Okay. It is not a private fund. As such should be with the government. Does not make any commercial activity specified by the central government through their notification. What is pension fund? Should be created under the law of a country, including law made by any of its political constituents being a province. Should not be liable to tax, satisfies all other conditions. Okay. So in these cases, this is exempt. Whatever they invest, okay. Plain படிச்சுங்க அது போதும். They are not allowed to. Then why should other countries invest? சும்மா வச்சுக்கலாம் ஒரு provision. They, a citizen of India employed in Indian Embassy, Tokyo. Remember, he is a citizen of India working in Indian Embassy, Tokyo. Received a salary and allowance at Tokyo from the government of India during the year ending for the services rendered by him in Tokyo. Besides, he was allowed perquisite by the government. He is a non-resident for AY 22-23. Examine the taxability of the same. Allowances also not taxable. But okay, the answer should start from normally. Salary is taxable at the place where services are rendered. However, where in the case of Indian citizen working in an embassy outside India, the income is the salary income becomes taxable. Allowances and perquisites enjoy exemption under Section 10(7). Good morning, Antonio. Yendiru. Your friend is also here. நேத்து துடிச்சிட்டா நீ வரலன்னு. நான் வீட்டுக்கு போறேன் அப்படின்ட்டான். He said no that you know something that is mis- can you tell her because I have asked her to give me all the corrections. Shall I? Shall I? A citizen of India left for USA for the purpose of employment on 1st May 2021. He has not visited India thereafter, which means for the year 21-22, he was only there for 30 days and he is a non-resident. He borrows money from his friend Mr. B, who also left India for employment 1 week before A's departure to the extent of 10 lakhs bought shares in X Limited, an Indian company. Discuss the taxability of interest at the rate of 10% in B's hands where the same has been received outside India. That is, the shares lane were a dividend. Adi ek. B. For investing in A. Sriram's answer is Mr. B has lent to Mr. A to invest in India. So the interest paid by A to B, both are non-resident, is taxable in India. ധാരാളമാണ് ധാരാളമാണ് That is the only thing you have to remember. Okay, not taxable. I wish that you do what she did. ஒரு நிமிஷம் திருப்பி பாருங்க. இன்ட்ரெஸ்ட்க்கு நம்ம ஒரு பாயிண்ட் எழுதியிருக்கோம். One non-resident to another non-resident. Interest on loan provided by one non-resident to another non-resident is taxable only if the loan is with the intention that it should be used in India for the purpose of business or profession. For the purpose of business or profession. Otherwise, it is not taxable. In this case, not taxable. Interest on loan is taxable for a non-resident. I'm giving you a holistic answer. If interest is provided by a resident. So, it is taxable by Government of India, taxable by another non-resident, provided the loan is taken with the intention of investing it in India for the purpose of interest on loan is taxable for a non-resident if interest. Okay, you got your point. Interest is, yeah, interest is paid by a resident. Okay, provided பதிலா paid ன்னு எழுதிக்கோ. Are you clear? Are you clear? Vivita paid a sum of $5,000 to Mr. Kulashekara, a management consultant practicing in Colombo, specializing in project finance. The payment was made in Colombo. Mr. Kulashekara is a non-resident. The consultancy is related to a project in India with possible Ceylonese collaboration. Is the payment chargeable to tax in India? As simple as that. Okay. No, did I say so? No, third case. Even if Vivita is a non-resident, then it is taxable, directly taxable. Yeah, direct answer only. This for technical services. டவுட் கூட அவன் ஒன்னதான்டா கேட்கறான். ஏன்டா இவ்வளவு இன்ஃப்ளூயன்ஸ் பண்ணி வச்சிருக்க? ஆ, அவர்கிட்ட போய் கேட்டு FTS is an international term for fees for technical services. XY Private Limited, a company having registered office in Singapore, for the first time had carried out operations during the year for purchase of goods in India on 4 occasions. Immediately after the purchase, the company exported the same to China. The total value of exports is 100 crores, on which it earned a profit of 20 lakhs before expenses of 12 lakhs, which were directly paid by the HO. The company seeks your advice regarding the taxability of the same. Superb answer. Superb answer. No, no. Mere purchase and export is not at all taxable. State whether business connection is established as envisaged by Section 9 of the Income Tax Act in under the following circumstances. A. Jupiter Private Limited London, a non-resident company, has set up a liaison office at Kolkata with the permission of RBI. Indian customers or brief of the product by JPL, a liaison office, interact directly with JPL for placing orders, for placing and processing of their orders. Why? Rolls Royce example. Okay, so mere exhibition of a product. Okay, please write down 17A. Mere exhibition of a product does not lead to business connection. Mere exhibition of a product does not lead to business connection. Okay, full stop, continue. Okay, if goods are stored as well as delivered, then only business connection is established. So in this case, வந்து directa JPL order they are interacting customers, not a Madan and Co. is acting on behalf of Nelson Incorporation, Sydney, a non-resident company. Madan Madan and Co. can accept the order, negotiate the price, and coordinate with Nelson for delivery of the product. MC is commission. MC is earning commission in this regard. Okay. Yes. Okay. Habitually. Okay. Write down. Habitually enters into contract, comma, act on behalf of the non-resident for closure of business deal. Hence, business connection is established. Mm. Yeah. Yes. Full stop, continue. Profit earned by Nelson Incorporation profit earned by Nelson Incorporation from such activity is taxable. So if you remember, yesterday I was telling you, to the extent, to such proportion, it is taxable. Okay, full stop, continue. Commission earned by Madan and Co. is taxable in their hands because he is always an Indian entity. That has no question at all. Hmm? Okay. Question number 18. Solta Raja. Stuck. Is he stuck? Stuck. Examine with reasons whether the following transaction attract income tax in India in the hands of the recipient. A non-resident German company which did not have a PE in India entered into an agreement for execution of electrical work in India. Separate payments were made towards drawing and design which were described as engineering fee. The assessee contended that such business profit should be taxable in Germany as there is no business connection within the meaning of 9.1. Why? Okay, it is fees for technical services. It is fees for technical services accruing or arising from a resident assessee. Okay, question number 18, part 1. Okay, part 1. In case of royalty and fees for technical services, business connection is established if it is received from a resident Indian. Full stop, continue. In the instant case, execution of electrical work is in the nature of FTS and drawing slash design is in the nature of royalty. Drawing slash design is in the nature of royalty. Full stop, continue. Payment is received from a resident entity. Hence taxable. A firm of solicitors in Mumbai engaged a barrister in UK for arguing a case before Supreme Court of India. Payment of 5,000 pounds were made as per the terms of professional engagement. Professional services rendered in India. Professional services rendered in India, hence taxable in India. அப்படின்னு எழுதிங்க. You know how to write the lengthy answer. from a resident if you receive. Okay, for services rendered in India. The services are rendered in India because the other person has represented in Supreme Court of India. Huh? Amount paid by Government of India for use of patent developed by Mr. A, who is a non-resident. Amount paid by Government of India. Nachi? Yeah, amount pay a patent இது royalty. Sai Engineering, a non-resident foreign company, entered into a collaboration with an Indian company and was in receipt of interest on 8% debentures of 20 lakhs issued by the Indian company in consideration of providing technical know-how utilized in the business in the previous year 21-22. Yeah, both two answers. That is what as you both were telling. Two answers has to be written. Two answers has to be written. Please understand. Okay. Point number one: fees for technical services. Point number one: fees for technical services. Any fee received from an resident Indian towards providing technical services is taxable in India. Hence, 20 lakhs of fees is taxable in India. Full stop. Next paragraph. Since the fees is paid in kind, that is debentures, interest arising from such debentures is also taxable in the hands of the non-resident. Okay, it's also taxable. Okay, as it is arising. Okay, as it is paid by a resident entity. Am I clear to you? Question number 19. Parthiv, aged 45, is a resident of India. During the financial year 21-22, interest of 3,10,000 is credited to his non-resident external account with UBI, 70,000 being interest on fixed deposit with UBI was credited to his savings bank account during this period. He also received 13,000 as interest on his savings bank. Is Parthiv required to file return of income? What will be your answer if he also owns a shop in Delhi, having area of 2000 square feet, 250 square feet, for which he has received a gross rent of 21,000 per month. Property taxes are borne by the tenant. Mm. Always taxable. Non-resident, resident ஆன அப்புறம் கொஞ்ச நாளைக்கு மெயின்டைன் பண்ணலாம். That's beautiful. Okay. Exemption is even after becoming a non-resident, he will have that small time limit of 2 years. From NRE. I'm coming to that. Okay. Part A. If he has only interest income, then he is not liable to file his return, as the total income would be only 63,000. Correct? 73,000. 83 minus 10. Okay. Part B. If he also has house property income, should he file his return of income? Why? Total income is only 2 lakh 49 before compare. That's beautiful. Okay. If he has, or if he also has house property income, ROI needs to be filed as the total income before allowing chapter 6A deduction exceeds basic exemption limit. Okay. Okay. Question number 20. Piyush returned to India on 12th June 21 for permanently residing in India after a stay of 20 years in UK. He provides the source of his various income, seeks your opinion on its taxation. Income from apartment in London, which was deposited in bank there. The flat was given on rent by him after his return to India since July 21. Dividend on the shares of three German companies which are being collected in a bank account in London. He has got two sons, one of whom is 19, other is 12. Both reside outside India. Both sons have 75,000 in UK and 40,000 in India. During the previous accounting year, when he was a non-resident, he sold 1,000 shares which were acquired by him in British pound sterling, and the sale proceeds was repatriated. The profit in terms of British pound sterling on sale of these shares was 175% of the cost of 37,500, which in terms of Indian currency works out to 50,000. Explain the taxation point of view, the importance to be given to tax sparing provision in a foreign collaboration agreement. ரொம்ப பெரிய வார்த்தையெல்லாம் பயப்படாதீங்க, ரொம்ப சாதாரண வார்த்தை. Tax sparing na wherever we are not going to tax. Why? ஆமாம் பராஜா, ஆனா அவங்க ஒரு ரூல் சொல்றான் பாரு. In the case of ROR, global income is taxable. Ah, that is where the answer should start. Arnaldan, the date. Okay, you have to find his residential status. Avladhan Raja. Okay, right? Determination of residential status for FY 21-22. Determination of residential status for FY 21-22. Basic condition A is satisfied. We all know 182 days or more is satisfied. Is he a non-resident in 9 out of the 10 preceding years. Is he in India for 730 days or more? No. Okay. Does not satisfy additional condition. Hence, he is a RNOR. Hence, he is a RNOR. RNOR, what are all the income taxable in India, received in India, accruing in India? Okay, deemed to receive, deemed to accrue. Okay. Income from business or profession outside India but managed from India. For a RNOR, what is taxable is, okay, okay, income received in India, income accruing or arising from India, income accruing or arising from outside India is not taxable for him, only for a profit and gains from a business or profession which is outside India but managed from India. For ROR, RNOR, it is taxable in India. For NR, it is not taxable. Remember? Okay, remember this. With this, we will answer case wise. Not taxable. Very good, Raja. Our non-resident are not taxable. அவன் அப்படிலாம் கேட்கல இன்டர்ல ஒரு டேபிள் கொடுத்தீங்கன்னு அவ்வளவுதான் அது இன்டர் கொடுத்துறேன் dividend on shares of 3 German companies which are being collected in a bank account in London. ஒரு கொஸ்டினே ஒர்க் பண்ணி காமிச்சுடுறேன் ராஜா ஆமா நீ இப்பெல்லாம் கேட்பேன்னு எனக்கு அன்னைக்கே தெரிஞ்சிருச்சு he has 2 sons 19 years and 12 years old. Okay, only minor income will be clubbed. Both reside outside India. So, income outside India is not taxable. Income earned from by in India for a minor son will be clubbed with that of Piyush. Huh? After providing 1,500. Chambar. அப்படின்னு கேக்குறியா டுகெதரா அப்படின்னு கேக்குறியா both are minor Yeah. Each of them earn 70 and 40. ஆ இல்ல அதான் தப்பா புரியுங்க. Both have. Both have 40,000 in India. Okay. ஆமா. ಮಾತಿರಲ್ಲ ನೀ ಬ್ಯಾಯ್ತಿಂದ ಹೊಲ್ತದ ಮಾಡ್ತಾರೆ. For anybody, repatriation is not taxable. compute the income in the hands of the individual being a ROR, RNOR, NR, and okay, right? Uh, you want the table first, right? Okay. Okay. Income received or deemed to be received in India. Okay. Taxable, taxable. மெதுவா எழுதிங்க. ம்? ஆமா. நீங்க எப்ப வேணா எழுதிக்கலாம். இது பொறுமையா எழுதிக்க. இப்ப நான் ஒன்னு அவசரமே படுத்தல. 4 லைன் ஐட்டம் தானே. ஆ, இல்ல. அப்ப எக்ஸலென்ட். இல்ல, because I don't write. I will ask you to write in a different color pen. Yeah, super, correct. Tick or yes அந்த மாதிரி தான் இருக்கும். Yeah, yeah, good. அவன் நிலைமையை நினைச்சுதான் நாங்க வருத்தப்படுறோமே தவிர. Just check I have the answer or not. I'll get the answers. We will just discuss the answer. Let's not waste time in the classroom. 1 minute. Give me a minute. Right? Okay. Interest on UK development bonds. If the Kurta taxable only for ROR. 50% received in India. That 50% is taxable for RNOR and NR. For ROR, the entire 10,000 will be taxable. For RNOR and NR, 5. Okay, will only be taxable. Okay, if you look at it, 10,000, 5,000, 5,000. Okay. Income from business in Chennai. அதுக்கு மேல படிக்கவே கூடாது. Okay. 100% in all the cases. 20, 20, 20. 20, 20, 20. It will be, okay, 20, 20, 20. STCG on sale of shares of Indian company. 20, 20, 20. Dividend from British company received there 5,000 dash dash, because for a ROR, global income is taxable. Wherever he earns, however he earns, it becomes taxable. So 5,000 dash dash. Dividend business dividend. LTCG on sale of plant in Germany, 50% received in India. 40,000, 20,000, 20,000. 40,000, 20,000, 20,000. Whatever is received in India is taxable. Income earned from business in Germany, which is controlled from Delhi. 70, 70. 40,000 received in India. For non-resident, 40. If he is not receiving anything, it is 70, 70 dash. But since he is receiving 40,000, 70, 70, 40. 70, 70, 40. Profit from a business in Delhi. 15, 15, 15. Don't look at where it is. It is income accruing or arising from India. Income from property in London deposited in Indian Bank at London. Only for ROR. 50 dash dash. Income from house property, interest on debentures in an Indian company. All. Fees for technical services rendered in India. Okay. Profit from a business in Bombay. Everyone. Pension for services rendered in India. In all the cases, it is for everybody. Income from property situated in Pakistan received there. Only for ROR. Only for ROR. Past foreign untaxed income brought into India during the previous year. Zero for all. Never will repatriation be taxable. Untaxed income should not confuse you. Never will repatriation be taxable. Income from agricultural land in Nepal received there. 1800 and then brought into India is never a taxable event. Income from profession in Kenya, which is managed from India, received there, then brought into India. என்ன இருக்கக்கூடாது 55 dash taxable, yeah. And the 70 70 40 put. Gift received on the occasion of his wedding, not at all taxable. On the occasion of wedding is not taxable. Interest from savings bank deposit in State Bank of India, all. And you can provide 80 TTA 10,000. Income from business in Russia, controlled from Russia, 20,000. Dividend from an Indian company, 555. Agricultural income not taxable for anybody, only for aggregation you will take it. Okay. Since, yeah, all custom. See, mm, maximum, I don't know, dreams and by Jan 1st, you will have the book with solution. As I prepare, I also prepare solutions. So, whatever questions, that will only be a e-copy because that will run for pages and pages together. But you will have the book with solution. I will ensure by January 1st or maximum 5th, you will have the complete book with solution. Huh? New Year gift, yeah. It's becoming chart accountant year gift. Mr. David, a citizen of India, serving in the Ministry of External Affairs in India. Remember, he is a citizen of India working in the embassy or other of India. Was transferred to Indian Embassy in Canada on 31/3/21. He did not visit during the previous year. So he becomes a non-resident. For 21/22, he is a non-resident. He received the following. Salary, is it taxable in India? Foreign allowance, is it taxable in India? Interest on fixed deposit from bank in India. Agricultural income in Pakistan. No, he is a non-resident. For the financial year 21/22, he is a non-resident. income from house property in Pakistan? No. So 5 lakh minus 50,000. Oh, computer kuttakan. Okay. 5 plus 1, 6 lakhs is only in the taxable in India. Okay. Can you quickly write down? Savings bank. The interest. Okay. Can you please write down? Write down, please. Okay. Editingla. Ange editya. Okay. Salary 5 lakh taxable. Computed கொடுத்திருக்காங்க. So standard deduction is assumed to have been provided. Foreign allowance 10(7), section 10, subsection 7 exemption. Section 10, subsection 7 exemption. அதே section. And the section allowances and perquisites paid to a person அப்படின்னா வரும். Interest on FD from India, taxable other sources. Agricultural income and house property income arising outside India and received outside India not taxable as he is a non-resident. No, agricultural income from outside India is taxable if he is a resident. And the கடைசி point அது இல்லையா, agriculture land in India வரும் அது, that is not taxable. Okay, okay. These sort of questions can also come, which is direct and simple. Okay, so if I look at this, we have completed a residential status, we have completed scope of total income under Indian tax law. Okay, we have completed these two arenas. Going to the third arena, special rates of exemption is also completed. Okay, exempt income for non-resident also completed, my dear friends. That is what is this salary, etc. Okay, right. Now going to the third arena, special rates of taxation applicable to non-resident. This is the second time I am telling you. Probably one more section முன்னாடி சொல்லிருப்பேன். Only your memory power will work. Continuous படிச்சிட்டு before going to that examination, that 1.5 days, the what எழுதி பார்க்கணும் rates. You should write and see. Only memory power. Of course, they are asking very, very simple question only from this. But generally, it is only memory power that will work here. Not your terrible, tremendous PGBP assessment of companies. I don't rely on memory power. I rely on your understanding ability. But here, it is only memory power that will be more consistent in your working. Okay, right. Dr. Manmohan Singh, when he was the finance minister of the country in '91, we faced a huge balance of payment crisis. Balance of payment is nothing but cash, foreign currency inflow, Indian currency outflow, the difference. At that time, what will make foreign nationals, non-residents, foreign companies, what will make them to invest in India? There are three things which are mentioned. One, the rate should be competitive. Across the world, we should have a competitive rate. Two, The procedure should be simple. 3. Give them administration relief. So what we made is, all the tax rates will be in 115. We all know what is the purpose of 115. Section 115 will consist the nature of income and its rate of tax. Charging section. Okay, right. This is second most important to understand. Simultaneously, we mapped the TDS rates with them. இப்போ 115A I am going to tell royalty and fees for technical services is 10%. If you go and check 194 and 195, the rate of tax for them will be, rate of TDS will be 10%. That is, if I am paying to him royalty, he is a non-resident, I need to deduct tax at 10%, always for non-resident plus surcharge if applicable, and always plus HEC, so 10.4. If he has to pay tax, what is the tax he has to pay? Same, 10.4. So I said, if tax is deducted at source, he need not file return. Rate is competitive, rate is simple, and no administrative relief for him. Am I clear to you? Non-resident sports person, what is the rate of taxes? 20. Good. 20.8. So for all those people who are playing in IPL, one relief I gave them is, we will deduct tax at source. உங்களுக்கு 3 types of income இருக்கலாம். Participation, advertisement, and price moneyயும் participation தான். Man of the match லாம். Participation, advertisement, and contribution of articles. எல்லாத்துக்கும் rate simplify பண்ணேன். 20.8. You need not file your income tax returns. So I gave them administrative provision. 3 types of income: participation, advertisement, contribution of articles. Yeah. As a professional. Okay. What is the important aspect of 115 from the first, which we are saying? Yeah, other than that. Okay, other than charging section. Okay. Okay, right, no problem. If your rates are concessional, you cannot claim any other deductions, and for long-term capital gains, I will not allow you indexation benefits. Nada Raja? மன்னிச்சிடுறா ராஜா, எனக்கு அந்த அளவுக்கு வரல. Administrative convenience, TDS rates are mapped with 115. The said non-resident need not file return of income if this is his only income and tax has been deducted at source on such income. Other provisions, no deductions. In case of capital gains, indexation benefit not available. Chapter 6A, deductions are not applicable. Set of benefits can be claimed. Not unabsorbed depreciation. Now, unabsorbed depreciation is an expenditure and not a loss. In the section rates, you don't have an option but to remember. Okay. Dividend and interest 20%. But we all know interest from business trust, infrastructure industries 5%. Royalty 10%. Okay, please read it. Please read this section 115A. Please read it. Very important section. Because of practical applicability. Raja? அதை பத்தி நிறைய பேசியிருக்கோம். கிளாஸா பேசியிருக்கோம். அவன் சொல்லியே சார், நீங்க சொல்லி என்ன பிரயோஜனம் எனக்கு? வெங்கடேஷ் அவன்கிட்ட தனியா ஏதோ ஃபீஸ் வாங்கியிருக்கான். இத பாருங்களேன், 194 LC, 194 LC, LD, all these things in TDS we have studied. Okay, right? Nada? Oh. நாளைக்கு உங்க கைக்கு வந்துடும். இது நான் வந்து சரியா ஃபார்மட் பண்ணல அப்படின்றதுனால திருப்பி ஃபார்மட் பண்ணிட்டு இருந்தாங்க. Yeah, true. Please read the rates. Please, இது எக்ஸாமுக்கு போறதுக்கு முன்னாடி you should write and see 115A, 115C, everything. என்னதான் பண்றது இவனை? அவன் வேற இவனை நம்பி இருக்கான். இவன் நல்லவன் நம்புறான் அவன். So here in the material when you get it, I have given the TDS rates also. Okay, TDS for non-residents where you can find 194 LB, LC, everything which will be mapped. Okay, 5%, 4%, everything will be mapped. Okay, for you. Okay, so that you can get it at one place, right? When you okay, so இதுதான் TDS rate ஞாபகம் வச்சு. Am I clear to you? Okay, so how to remember this? How to remember this? If it is infrastructure industry, if it is investment in infrastructure, 5%. Business trust is also real estate investment. Okay, investment trust, all infrastructure 5%. One. Number two, royalty and fees for technical services 10%. ஆஃபீஸ்லயே பார்த்திருப்போம். ஓகே 10%. 15 சிபி கொடுத்திருந்தாலே உங்களுக்கு தெரிஞ்சிருக்கும். ஓகே 3 அதர் இன்ட்ரெஸ்ட் டிவிடெண்ட் ஃப்ரம் மியூச்சுவல் ஃபண்ட் எல்லாம் சேர்த்து 20%. ஓகே ஈஸி டு ரிமெம்பர், டோன்ட் வரி. இப்பதான் இது படிச்சோம். ஓவர் இந்த ஃபண்ட் மேனேஜர்ஸ் overseas OFB அப்படின்னு offshore investment funds, okay, overseas financial organization, their return, I want them to invest in India, their return is taxable at 10%. Wherever special rates of taxation is applicable, such special rates always. Are you clear? Wherever ஏன்னா 111A 112A மாத்தல, மிச்சதெல்லாம் தான் மாறி இருக்கு. ஓகே suppose if they are having lottery winnings, that is 30%. Wherever special rates are applicable, special rates. A chapter இது வந்து நான் questionable ஏரியால தான் வருது. மோஸ்ட்லி இண்டிவிஜுவல்ஸ் அந்த ஃபாரின் கம்பெனி அந்த மாதிரி ஆஃப் ஷோர் ஃபண்ட்ஸ் கேட்கறது இல்லை. A chapter which relies on your memory power. Okay, this is one chapter where there is not much to teach but much to remember. ரொம்ப சிம்பிளா இருக்கும். நான் காமிக்கிறேன் क्वेश्चंस உங்களுக்கு. Okay, one question expect from poem or scope of total income, 3 or 4 marks. One question from this arena. Okay, now this is important. Next is 115 AC, which is important. Yes, shares issued outside India will take the form of global depository receipts, and a bond will also be known as global depository receipt. Shares and debentures which is approved by the central government will partake the character of GDR. Any return on them, including the long-term capital gain, is taxable at 10% on transfer of it, because it is shares of Indian company, taxable. Then now the new concept is RDB, rupee denominated bonds, issued with the approval of the RBI, that is also 10%. This is important. 115 A is important, AC is important. RDB means rupee denominated bonds. எல்சிக்கு தானே அது, ஐ மீன் இது ஐஎஃப்எஸ்சில இருந்தா தானே நான் வரேன். ஐஎஃப்எஸ்சிக்கு நான் தனியா வரேன். ஐஎஃப்எஸ்சில எது என்ன பண்றான், நல்லா பண்ண போறேன். I have consolidated all the IFSC provisions in a separate sheet. So that IFSC ஒரு வாட்டி போறதுக்கு முன்னாடி, IFSC is International Financial Service Center, which is located in Gujarat. Okay. So their GDRs, their rates of taxation, I will come to it separately, don't worry. Am I clear to you? remember 115 AC is a questionable area. 10% both on long-term capital gains and interest or dividend from GDR, okay, is a questionable area. This is exclusively for FIIs, foreign institutional investors, and funds located in specified fund located in IFSC. IFSC is like a special economic zone for non-residents. Okay, same rates தான், பெரிய change கிடையாது. Dividend income 20%, interest income 20%, income by way of LTCG 10%. LTCG under 112A we all know, up to 1 lakh nil, more than that 10%. Infrastructure investment 5%. STCG on which STT not paid 30%. Okay. Income from securities received by a specified fund is always 10%. And here surcharge rates are applicable for FIA. Foreign portfolio investors, foreign institutional investors. No, I say that. Okay, right. Raja, Padi Raja. Padi, the questionable area. It's an area 115 AD important mark panninga. I have 115A important. 115A rates you have to write and see 10 times, 15 times. And easy to remember. 115 AD foreign institutional investors, they are now considered more like an individual. Surcharge rates are more than 50 lakhs, less than 1 crore, 10%, more than 1 crore, 15%, more than 2 crores, 25%, more than 5 crores, other than the 3, 37%, same like individuals. Yeah, it will map with that 194 tax rates, TDS rates. Everybody will deduct tax at source. இல்லாட்டி 100% disallowance. Okay. Suppose in case of specified funds, the provisions of this section will apply to the extent that income is attributable for units held by non-residents. If both the residents and non-residents are holding the units. Proportionate exemption. அதுதான் இந்த formula. Okay. Income attributable to units held by non-resident divided, okay, income held divided by aggregate value of assets. Okay. Question வராது, but இருந்தாலும் generally amendment ன்றதுனால இது நிறைய இடத்துல இது சொல்லிருப்பாங்க இந்த amendment. Non-resident sports person you already know. Okay. Okay. So what are all the sections? I asked you to remember. 115A. Okay. Rates are 10% royalty and fees for technical service, interest 20% and 20% interest and dividend, provided it is invested in foreign currency. And long-term all infrastructure bonds 5%. Okay, GDR 10%, foreign institutional investors same rates only, except that their surcharges are different. Please write and see before exams and keep repeating this provision to some manner. Okay. Now exclusive provisions for, actually I should have made it, final material non-resident Indians. ஆமா அதுதான் உனக்கு இல்லடா அது NRI. Okay, not only for NRI, for others also I give one benefit. If you want to compute the capital gain in the currency in which you invested, okay, this benefit is available for investment made in foreign exchange. We call them as foreign exchange assets, which are shares, debentures, deposits. Not for immovable property, not for other things. I want them to invest in the. For this purpose, capital gains can be computed in the currency of their investment. How will you do that? Full value of consideration, cost of transfer, cost of acquisition will all be converted into foreign currency by applying the average of TT, buying and selling. TT stands for telegraphic transfer, buying and selling rate. Capital gains will be converted into Indian currency by applying TT buying rate. Benefit of indexation not available. Yeah. For non-resident Indians, income from investment 20%, அதே தான் dividend இது, LTCG 10%, any other income rates in force. அதே தான், the same only in a different section. If they reinvest that capital gains, okay, within 6 months, I'll give them exemption. The capital gains that I am computing here, no, if they reinvest within 6 months, I will net the whole of the net consideration reinvested, whole capital gain, otherwise 54F money. Yeah. Rate of tax is also 10%. Because currency fluctuation will be a benefit for them. Depends. We can work out both options and see. Normally, in professional world, we work out both options and see. Please patiently read through. They can continue to avail the benefit after becoming a resident also. And if they want to forego that benefit, they have to file a form. Please read it. More to do with memory, less to do with anything else. The first question. A foreign company furnishes the following data for the financial year ended 31/3/22. Royalty from Indian concerns, okay, 20 plus 10, 30 lakhs. Expenses cannot be claimed. You need not look at expenditure, it cannot be claimed. Dividend, expenses cannot be claimed. Interest received on Indian concern, from an Indian concern, on money lent in Indian currency. So, yeah, normal rates of taxation, expenses can be claimed. Interest received on in government on money lent in foreign currency. Special rates, no expenses. Income from mutual fund, special rate, no expenses, 20%, 20% dividend. Other business receipts, special, no special rate, normal rate, expenses can be claimed. LTCG on sale of listed shares, Up to 1 lakh exempt, balance taxable at 10%, normal STCG taxable at normal rates. Compute the total income and the tax payable. Amanda. Work out in this format. Mm. Foreign company. ஏன்டா ஏன் இது can I? Question number 24. During the financial year 21-22, Nadal, a tennis professional and a Spanish citizen, participated in India in a tennis tournament and won prize money of 15 lakhs. Contributed articles on the tournament in the local newspaper 1 lakh. He also paid 5 lakhs by a soft drink company for appearance in advertisement. Although his expenses in India were met by the sponsor, he had to incur 3 lakhs towards cost of travel. He was a non-resident for tax purpose. What is his tax liability? Is he required to file return? 20%. He contributes articles. In section 115 BBA. Yeah, yeah, Pavam. Yeah, Pavam. Ah. அப்படியா? நல்லா இருக்கா? என்ன அப்ப அவங்க ரிட்டையர் ஆக மாட்டான் போல இருக்கு. ஃபெடரல் rabbit. What a player. What a player. Nadal is clay court genius. And stamina to play for a long duration. 42. He's amazing. He's just amazing. Roger also, no doubt. Awesome tennis. அதுக்கப்புறம் பார்க்கவே okay, I agree. Matthew Hayden, a foreign national and a cricketer, came to India as a member of Australian cricket team. Received 5 lakhs for participation in matches, 1 lakh advertisement, contributed articles 10,000. He won a horse race for 10,000 in Mumbai. He has no other income. Compute his tax liability. Okay. Okay. Are the income specified above subject to tax deduction? This is 194E. This is 194BB. You have to write it as a theoretical answer, remember. Is he liable to file his tax returns? That's the wonderful answer. Okay. Remember, he has winnings. If participation has been the only income, if 194E is the only income, he need not file. Since he has winnings, he has to file the return of income. What would have been the tax liability of his March referee? Part 4, Kolkata High Court has specified that match referee is not a sports person. Individual தானே. ஆமா. No, that is whenever there is special rate, that is only applicable. They cannot take the beneficial rate. With Villa, a resident Malaysia, had acquired 1,000 bonds for Malaysian ringgits 1 lakh and 800 GDRs for Malaysian bonds are also GDRs. Okay. 8 lakh 42 of Indian public sector companies sold by government in 2004-5. At that time, the relevant exchange rate was 11.727. During the previous year, he received interest and dividend on GDR. What rate it is taxable? 10%. GDR 10%. Any return on investment, that is interest, dividend and LTCG 10%. He has incurred expenses 3 lakh. He sold all these bonds for 2447.85 and 1 crore 59 4851 respectively. The relevant rate of exchange was 16.833. He had other business income 120, taken an LIC policy for 140. Compute the tax payable by Billa. Read through. 1st working note, computation of capital gains. Okay, note, they can compute in the currency of investment. Sixteen point 833. Yeah. 159 40 851. 159 40 851 divided by 40. How much ATC? 1,45,000. How much I can claim? 1,20,000. Only 1,20,000. Against the special rates, deduction under Chapter 6A is also not available. Okay? Restricted to income taxable at normal rates, 1,20,000. Remember, deduction is not available if income is taxable at special rates. அவ எங்க எழுதிட்டு பாரு சாய் அவளை பாரு அவளை எங்க எழுதிட்டு பாரு அவன் the next அந்த கடைசி லைன் வந்து அப்படியா அந்த மாதிரி ஒரு நோட் புக்கை டியூன் பண்ணி வச்சிருக்கியா ப்ரோக்ராம்டு போட்டு காமிக்கும் போது ரெண்டா காமிக்கும் any doubt here 10%. But here you can claim indexation, there you cannot. Mr. X, a non-resident Indian, acquires 10,000 shares in A Limited, an Indian company, for 1 lakh by utilizing the foreign currency which he got on 15/7. On 11/9, X sold such shares for 2,25,000 and utilized the proceeds in acquisition of 5,000 shares of B Limited after paying an expenditure of 25,000. Compute the capital gain liability in the previous year. Exempt, correct. The capital gain is going to get exempt. I agree with you. 2,25,000 divided by 47, correct? Average of TT buying and selling rate. 25,000. What is the expenses? Cost of acquisition 1 lakh at 45.5, because the provision says take the average of TT buying and selling rate. only at buying rate. The LTCG computed will be converted back into Indian currency using the buying rate. நான் நான் அந்த இதை டபுள் டிஜிட் காலம் இது பண்ணியிருக்கேன். ஸோ உனக்கு கொஞ்சம் ஆன்சர் சேஞ்ச் இருக்கும். Yes, he should not take that money back. So I am making him invest it here to keep that foreign currency here. இந்தியா தான் இன்வெஸ்ட் பண்ணிருக்கணும். கல்வி Red Limited, a non-resident foreign company, entered into a collaboration agreement approved by central government with Blue Limited, an Indian company, on Feb 21st, and in receipt of the following on 31st March 22, last year December. Okay. Interest at the rate of 8% on 40 lakhs issued by Blue Limited on 1st July, in consideration of providing technical know-how, manufacturing process and designs. So in the 40 lakhs is also income. Interest arising therefrom is also income. 40 lakhs is taxable at 10 percentage. This 8 lakhs is, interest is taxable at 20 percentage. Service charges at 2.5% of the value of plant and machinery leased out to Blue Limited, payable each year, taxable in the normal rates. Apart from the above, Red Limited received a LTCG amounting to 1.90 lakhs on sale of debentures of Green Limited, an Indian company, subscribed in US dollars 10%. Compute the total income and tax due thereon. Go ahead. Okay. Okay, you have a valid point. I think I made a mistake. It should be 10%. I think LTCG taxable at 10% for foreign companies. For investment is also made in foreign currency. Then, what? Which one? What is that? What? Huh? Ah. ஆமா இல்ல 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 sorry, it is all service charges are also technical charge. Leasing lease rent நினைச்சு நான் சொல்லியிருப்பேன் 40%. சர்வீஸ் சார்ஜஸ்னா it is எதுலயும் இல்ல சாரி, ஃபாரின் இந்தியன் கரன்சில இன்வெஸ்ட் பண்ணியிருந்தா தான் அது 20% வரும். ஃபாரின் ஃபாரின் என்ன, that is normal tax rate, 112 rate. If you invest in Indian currency, you don't have that option. Sorry, friends, LTCG is taxable at 10%. Because it is not invested in foreign currency. நீ வந்து உனக்கு கொடுக்க வேண்டிய பேமெண்ட்டை you converted it into debentures. Only if you bring in foreign currency into India, you will get that concessional rate of 20%. Interest. Yeah, yeah, yeah. No, it is treated as fees for technical services. Also check one. But take this answer. I'm pretty sure it is 10% the LTCG. The service charges on lease rent மாத்திரம் நான் உங்களுக்கு கன்ஃபார்ம் பண்றேன். அதான் அது மாத்திரம் உங்களுக்கு கன்ஃபார்ம் பண்றேன். Otherwise this answer will hold good. I don't have the answer. It's an examination question. The following data is furnished by Mr. Sumit, a non-resident and a person of Indian origin for the financial year. LTCG on transfer of foreign exchange asset computed 10% rate of tax. Expenditure wholly incurred in connection with the transfer, not counter. You should reduce it. And then only 10%. The format itself says that expenses should be reduced. Interest on deposit held with private limited companies. Interest taxable, Paraja. Yeah, taxable. Lepa, LTCG arising from transfer of foreign exchange asset. Foreign exchange asset means shares in Indian company, debentures and bonds in Indian company, deposit in Indian company, அதெல்லாம் தான். Interest on deposit, interest on government securities, interest on deposit with public companies, dividend from domestic company. Investment in notified certificates referred in 4B on 33. Investment in public limited companies. Tax deducted at source. ATC, yeah. Go ahead. So there are two alternative answers. One, treating them it's taxable at normal rates. Okay. LTCG 5,70,000. You all got it right. Okay. Other sources. Suppose if they have not, the question has not specified that investment is made is foreign currency. So applying the normal rates, I am getting a tax of 182 520. Where which investment is eligible to claim? NSC இருக்கா? Oh, oh. Eligible issue of equity. இதுவா? Yeah, you have not invested within 6 months. அங்க எழுதியிருப்பேனே நானு. If he reinvests within 6 months, exemption can be claimed. July 21 sales, so he has not invested within 6 months. நான் இது பார்க்கலப்பா, sorry. Yeah, that this, yeah, yeah. அது public limited company பார்த்துட்டேன். You are right, you can claim. In which case my refund comes to 47 to 80. Yeah? Huh? Yeah, yeah, please. 250 தான் basic exemption. His question was NRI's basic exemption limit continues to be 250. Alternative working is not availing that it is interest and a foreign currency investment. So the whole provision will change and he will result in paying tax because this is taxable at 20% and not normal rates. Question claim பண்ண மாதிரி எனக்கு ஞாபகம் இல்லை. என்ன ரீஃபண்டா? -150 சேஞ்ச் ஆச்சு. Sorry. கரெக்டா? 2 lakh 3,70,000 into 20% plus 12,500. A second one is yes invested. இது வந்து yes invested in Indian currency. It is not specified that it is made in foreign currency, hence applying the normal provision. கீழே வந்து I assume that assuming invested in foreign currency and availing concession இல்ல இது, but அந்த countryல you'll get lot of exemption அதனால. Yeah, both in exempt. Tax தானப்பா மாறும். Columnar போட்டிருந்தோம் for example. I mean, they are not giving it vague, but it came in exam. Are you clear? Okay. Are you clear? Right. Mr. Beast, a non-resident individual, earned an interest income of 12 lakhs on an investment from a notified infrastructure debt fund. Okay. Set up in India, which was eligible for 1047. Further, he incurred an expenditure of 15,000 and earning that income. Examine the tax implication in the hands of both the fund. For the fund, it is exempt 1047, and Mr. Beast to justify your conclusions with the relevant provision of income tax in two situations. If Mr. Beast is in NJA, exemption will not work, and the infrastructure fund is liable to deduct tax at 30%. Okay, same question we have worked out in NJA provisions. Okay, expenses cannot be claimed, exemptions will not work, and the infrastructure fund is liable to deduct tax at 30%. Mr. Bate stationed other than NJA 5%, and so the tax rate is also 5%. 5 plus okay. Will there be any change in tax liability if the income received is fee for technical services? Yes, 10% in lieu of interest income of okay. So it is 10. Am I clear to you? Okay. So we wind up here today. Tomorrow we will look into the remaining two areas of non-resident taxation, and then progress to DTAA, double taxation avoidance agreement. Before moving on, before winding up, okay, let's look into this year's question paper once on what has been asked. International taxation நம்ம இன்னும் பார்க்கல. Okay. இந்த question நம்ம classல போட்ட question தான். Okay, that is for that man hour spent how much அப்படின்றது the same repetition தான். Okay. இது DTAA question. Okay, this is tomorrow we will work it out. It is purely assume the rate of country and under BAC எப்படி போடுவோம் அப்படின்றது. And NR taxation la the following is the income of Mr. Ayush. இதே question தான். Long term capital gain on transfer of specified securities date. Okay, expenditure wholly incurred, interest on deposit, interest. Okay, investment in notified saving certificate, investment in Indian public company shares. Okay, tax deductor, compute the balance tax payable in accordance with the special provision. Okay, so இது மாதிரி தான் question வரும். நாம அவ்வளவு படிச்சாலும். Okay, sometimes at night when I am sleeping I used to think that நாம ரொம்ப சொல்லி தரோமோ எங்களுக்கு அப்படின்னு பட் எனக்கு ஒரு பயம் இருந்துட்டே இருக்கும் at the back of my mind that something which we have not discussed வந்துச்சுன்னா என்ன பண்றதுன்னு. நேற்று நைட் எனக்கு ரொம்பவே இருந்தது. நான் ரெசிடென்ட் டாக்ஸேஷன்ல ஒரு 10 கொஸ்டின் போட்டா போதும், நம்ம வந்து 30-40 கொஸ்டின்ஸ் போடுறோம் அப்படின்னு. Yeah, I just want to ensure that things are ready. Okay, so on the other hand you also had a question on இது ஈக்குவலைசேஷன் லெவி, அது நான் போடும்போது நான் அதை எடுத்து காமிக்கிறேன். அண்ட் டின் கேபிட்டலைசேஷன். What is thin capitalization? Is there any threshold limit for claiming 94B, that is interest, maximum limitation on interest? Okay, discuss its applicability different. Okay. So, discuss its applicability to different entities. Na the banks க்கு இது கிடையாது. மிச்சவங்க எல்லாருக்கும் 30% of EBI TDA. Okay, 94B, thin capitalization. Thin capitalization means where the capital is less but interest, I mean, it is more. Okay, meet you tomorrow morning. Hopefully we are closer to completion tomorrow. All the best, friends.